I'm Lindsey Blumell here with Jay Taylor, who is the editor of Jay Taylor's Gold, Energy, and Tech Stocks. What are the current drivers and factors for gold and silver prices?
Well, I think you have to distinguish between the physical markets and the paper markets or the futures markets. The physical markets, there's been, it's my understanding, very, very strong offtake, and the markets would suggest that prices should be much higher than they actually are reported in the paper markets, and those are the market prices, of course, that are quoted every day. The drivers really for the physical market is quantitative easing and money printing around the world. That's the primary one, and the cheapening of fiat money. So there's a growing loss of confidence on the part of a lot of people. I would say not so much in the United States and in Canada as much as, let's say, the BRIC countries and China and other countries. The creditor nations, the countries that had been buying our treasuries are losing confidence, and they are opting for gold, and they are opting to get out of treasuries and out of the U.S. dollar. So I think that's the main driving point. The futures markets, though, are painting a picture that is not nearly as robust as I think the underlying physical demand suggests it should be. And there are some theories, and I think some well-founded theories and some evidence that some vested interest is trying to hold down the price of gold as it's quoted, namely the major bullion banks that play in the futures markets, which are much, much larger than the physical markets. And it's been pointed out, especially in silver, that if there was a demand, or if the people in the paper markets decided that they wanted to take possession of the metals, you could see an exponential rise in the price of gold and silver, but especially silver, because the amount of silver that's supposedly available is minuscule compared to the paper markets. So I think that the drivers are basically debasing of currencies by central banks around the world, and there's not a one of them that isn't doing it.
What's happening with gold and silver? Why is there this correction, like going back to the theories that you're talking about? And do you expect this current correction to continue?
Yeah, I think the correction could be nearly over. I think there could be some of that manipulation aspect that I just mentioned. I think there's the mainstream propaganda that we get in the United States. I mean, if I were to go down the street of New York and ask people if they thought buying gold and silver was a great idea, I would guess that I'd get maybe 1 in 100 that thought it would be a good idea. I mean, it's gold and silver is just not really mainstream yet in the United States for the most part. We have ways to buy in and out of markets, but in terms of buying the metal and owning it and understanding it as a monetary metal, as I think people began to do in 1980 when we saw an exponential rise in the metals prices, people just aren't there yet. And I think also, though, that we have to recognize that there is a very powerful deflationary dynamic that's going on right now in the global economy that Mr. Bernanke and other central bankers are fighting furiously to try to overcome. And that deflation is caused by way too much debt relative to income. So in essence, the global monetary system and the global economy is insolvent right now. And they're printing money like mad to try to overcome this insolvency and this inability to service debt. I mean, the debt to GDP ratios in the United States, they've come down a little bit since Lehman Brothers, but not by much, and they're much, much higher than they've ever been in history. So we have an insolvent system that is trying to deflate. So the underlying dynamics are deflationary, and that would take the nominal price of gold and silver down. There are powerful forces that are bringing and holding gold and silver down, in addition to those that are, I think, trying to probably to keep the lid on gold and silver, because as Alan Greenspan said in his article 1966, Gold and Economic Freedom, the real danger to socialism, which is what all of our governments are trying to engage in now, is that people will start to recognize that paper money is a fraud, and they opt for gold and silver. So you have to keep people believing in the system, and I think there are powerful forces, propaganda forces, especially in the United States and in Western Europe, that are trying to keep people keep their minds and their confidence in paper money. So, but that can only last so long, and there are powerful forces in the other direction with money creation, and as I say, the creditor nation and our trading partners that are becoming disenchanted with owning treasuries and owning dollars. So it's a big war that's going on. I do believe that we may be in the process right now with quantitative easing infinite, just starting now, the purchase of about $85 billion worth of securities a month by the Fed, that I believe, and sort of some of my indicators are suggesting that we're in the process right now of breaking out to the upside. So I think 2013 could see a very dramatic rise in asset prices, including gold and silver, of course.
Okay. It's interesting that you said the average person on the street wouldn't really be aware of this, but you've been producing a newsletter that's gold oriented since the early 80s. So have you seen any difference in the general public over these decades, or their general attitude towards gold?
Not too much. No, I would say not. I mean, I go to conferences and speak at conferences all the time, and especially in Canada, I think the Canadians look at gold and silver as just another mining business, you know. But politically speaking and economically speaking in the United States, I think in 1980, when we had a blow-off in gold to $850, which, by the way, was about a year before I started publishing my newsletter, which focused on gold. It was the beginning of a 20-year bear market, and my timing couldn't have been worse. No, I don't think that, you know, at that time I can remember people lining down the block to buy gold bullion at Deep Carrera in New York City. No, nothing like that we're not anywhere close to that right now. So the major psychology is definitely not in buying gold. Now we've had the trading mechanisms, you know, we have the ETFs now that make it possible for people to buy gold, and I think and traders and, you know, hedge funds and the like, but they're in and out of that. They just look at it as another commodity, not as a monetary metal. And so they're in and out of gold and silver just as a trading vehicle to make some quick bucks, but they don't really understand. I think as people began to understand in 1979 and 1980 that gold is a monetary asset, and the lack of confidence, despite the fact that we are far worse off now than we were in 1979 and 1980, monetarily and economically, the lack of the confidence in the monetary system and in the gods at the Fed is much greater now than it was back then. So, but I think that what we have to see, and what we will see inevitably here, because I think the system is breaking down, is a total loss of confidence in the financial system as it exists now, in the fiat money system, the floating rate system that began when Nixon took us off the gold standard in '71. I believe that when that falls and when there's a total loss of confidence, and I think you could see an exponential rise in the price of gold and silver. I think we will see that.
Yeah, I know that you've said this before, and I'd like to ask you about it then. And this leads to that, about the global financial system going to gold-based currency standard. When do you think that's going to happen, and is it really inevitable?
You know, it's really hard to time that sort of thing, but we do see that the Fed is needing to buy more and more paper, more and more treasuries all the time. That's why they're doing all this quantitative easing, because the Chinese and others are stepping away from it. You know, it was David Stockman that said in New York City at a Mises Circle event a couple of months ago, but it was actually right after Bernanke announced quantitative easing infinite, that in fact we are destroying our capital markets, and Mr. Bernanke is, with his policies, and that we are destroying capitalism from the inside out. And I think that the treasury markets are in the process of being destroyed, because ultimately there will be no buyers. I think at some point we're going to see there are no buyers of treasuries, and then I think we could see treasury rates or the market start to really price treasuries higher. Of course, the Fed can keep buying more and more of them, buy 100% of them, but then the loss of confidence, and that loss of confidence, I think, is the trigger point that could really send the metals prices much higher, because people would start to lose confidence in the currency itself. And so when that's going to happen, it's hard to say. You know, that I just heard this morning that the Japanese are deciding that they are going to start buying U.S. treasuries. So they're going to print endless amounts of yen to buy U.S. treasuries. Well, that would probably, you know, that the intention there is to cheapen the yen so that they can export more that will be to strengthen the dollar relative to the yen, at least. And so, there will be games played among the G7, among the countries that are allied, to try to keep the system intact as long as they can. And I suppose, there needs to be a coordinated effort among the central banks to try to do that. And I suspect there will be. So it's hard to say how long, but at some point in time, when the BRIC countries, and especially with the growing economic power of those countries, decide that they've had enough and they won't trade with us unless we give them something that they want in exchange for the goods they're sending here. That could be the time, I think, when the system really breaks down and we could go to a monetary system based once again on something that's real rather than fiction, which is really what our monetary system is based on now.
So if it ever does go to a gold-based, or when it goes to a gold-based currency standard, do you think that we need to worry about the environmental impact of that? Do you think that's a threat at all?
Well, I think the environmental impact, I suppose in answer to your question, if the price of gold rises to such a great extent that it really spurs, tearing up the landscape everywhere to look for gold, then, I'm always concerned about the environment. Anybody in a sane mindset is worried about that. I think there's at least in Canada and the United States, there's a very strong environmental presence that keeps mining companies in check from destroying the environment to a very great extent. I think that, I think that we could see already, there's problems in the sense that it's becoming very difficult to mine gold. I think it's something like an average of 1 gram per ton is being taken out of the ground now by the major mining companies. And it wasn't that long ago, within the last 10 years, when the average grade was 2 grams per ton. That means you have to move twice as much rock and dig twice as big a hole to produce the same amount of gold. So I suppose that there could be rightfully some concerns about this huge demand to make money. Although right now, currently, with current gold prices, it's not all that profitable for the mining companies. They are doing well, and I think that we're going to see a huge increase in the gold price, in the real gold price, which, by the way, is more important than the nominal gold price, because if the cost of getting it out is rising as fast as the price itself, or faster than the price, then gold mining becomes less profitable and you'd see less of it. So, but I think it's a concern. I think environmental issues are always a concern. As one that's a proponent of gold mining, I don't want to see the companies I own destroy the environment, or that's not a good thing.
Do you see governments or central banks confiscating or expropriating gold and silver in the future?
I think it's very possible that we could do that could be something that would happen again. And I would say that in part, if the United States does not actually own all the gold it pretends to own, some 261 million ounces, if it doesn't really have the gold, and the work of the Gold Antitrust Action Committee suggests it's very likely that we don't, that it's been leased out to other countries and so forth. And if the trading partners like China and the BRIC countries tell the United States to take a hike unless we pay them with something of value, I think that's likely to be coming down the pike one day. And then if the United States doesn't have the gold it pretends to have, it wouldn't have the backing, or it wouldn't have what it needs. Of course, we would need to see much higher gold prices than we have now in order to make that sort of international trading, gold-backed trading system work. And I think it was John Butler who's written an excellent book called The Golden Revolution. And John is suggesting that we need to see a gold price of at least $10,000 an ounce to make that workable. And so if that happens, then I suppose it's possible. Although on the other side of it, the arguments are that unlike the 1930s, the Fed doesn't need to have gold to expand the monetary system. Of course, if we went on a gold-backed system globally, then that might change that argument. Another argument is that not very many Americans own gold now compared to what they owned in the 1930s when we were on a gold standard. So, And the other argument against going on to a gold standard is if the deflationists are right and we head into a massive deflationary depression, then the dollar could actually gain purchasing power and become more valuable globally. And I do believe that's a possibility. I don't know which way things are going to go, but I think that's possible. And if that were to happen, then that would be an argument against confiscation as well, because the dollar would gain purchasing power. But I at this point in time think that the chances are better than 50-50 that we could see some sort of a confiscation or nationalization of gold resources that would allow the United States to start trading again. I hope that's not the case, but I'm fearful that it could be.
Do you prefer gold mining stocks versus the metal, or vice versa, and why?
Well, I think that's a hard question to answer, and it needs to be answered by each individual. I think that people should start out by owning gold and silver, having some in their possession, and probably diversifying their holdings in different ways, and perhaps across country borders if they have enough resources to do that. But I do also believe that we are in the bull market of a lifetime for gold mining stocks. I've said that. However, need to be quite selective. I think that we've seen recently with all this risk aversion and in this deflationary, let's say, huge amount of debt relative to income, that people are becoming less interested in speculating in exploration stocks, and they're more interested in buying companies. And I think I am more interested in buying companies that have that are cash flow positive, that can grow organically. And there's a growing number now. We've had a bull market in gold since 2002 or so. There's a growing number of companies that are now starting to produce, smaller, mostly Canadian companies that are starting to produce gold and silver, and those companies have the wherewithal to grow organically. And the really big guys, I'm not all that bullish on, because they're having quite a time replacing their reserves. So I sort of like the sort of mid-tier and lower, smaller, junior gold mining companies that are in production, also companies that can stay in business during these very difficult markets to finance exploration. So the project generators use other companies to spend money to drill expensive holes. The streaming companies like Sandstorm Gold is an excellent model. And then there's some juniors out there that do have deep pockets. They have good, solid backing behind them and great projects that are exploration projects that I do like, but I'm being very selective on those.
Jay Taylor also hosts a radio show called Turning Hard Times into Good Times. For Cliff Cool, I'm Lindsey Blumell.